Thank you for joining today and welcome to the A2ii-IAIS Public Dialogue on Insurance and the Sustainable Development Goals. I'm Hannah Grant and I'm head of the Secretariat and one of your hosts. I am delighted that we have a large and diverse attendance on today's call, with participants joining us from 70 different countries, made up approximately 50% of supervisors and policymakers, 25% industry, and 25% other key actors, including development partners, donors, and research institutes. We also could not have picked a better day to be discussing the SDGs, being Global Earth Day, as well as the US Climate Summit. Before we begin, I have some just quick housekeeping points I want to go through. So please be aware that this webinar is being recorded, and for sound quality, you are muted. For questions, please use the chat box on your right-hand side. And should you wish to unmute to ask a question, please contact the A2i Secretariat, either through the chat box or via email. For those of you wishing to access the simultaneous audio translation, and we have both French and Spanish available, instructions are being sent now over the chat box. I'm also very pleased to be joined by Connor Donaldson, who is Head of Implementation at the IIS, our partner in organising these webinars, and also my co-host today. Welcome, Connor. Please go ahead.
Thank you very much, Hannah, and it is an absolute pleasure to be with you today, and I'm very pleased to be able to offer a warm welcome on behalf of the IIS to this fantastic program, but also welcoming such a large and diverse group of stakeholders, be they supervisors, policymakers, industry, or other people active in the space. It's fantastic, and very heartened to hear the very large interest in the subject matter. And I think from our side, it's important to note that at the IIS, we have a firm conviction that insurance is vital to achieving the Sustainable Development Goals. Increasing access to insurance is only going to accelerate progress. Public dialogues such as this, which bring together stakeholders to set aspirations and create alignment, are an excellent starting point for realizing this progress and this potential. It is with a great pleasure that I now get to introduce our first keynote address by Her Majesty Queen Máxima of the Netherlands. Queen Máxima is also the United Nations Secretary General's Special Advocate for Inclusive Finance, or the UNSGSA. She will be joining us today via pre-recorded video message. Queen Máxima has served as the UN Special Advocate since 2009, and in this role she has been a leading voice on advancing universal access and responsible usage of affordable, effective, and safe financial services. The UNSGSA raises awareness, serves as a convener, encourages leaders, and supports action to expand financial inclusion at the global and country level, all in close collaboration with partners from the public and private sector. With that, I'm very pleased that we can move on to Her Majesty's welcome video.
Ladies and gentlemen, COVID-19 has exposed the devastating impact of uninsured risk on current and future generations. The World Bank estimates that more than 100 million people will be pushed into extreme poverty because of the pandemic. The vulnerable and uninsured are disproportionately affected. Without access to insurance, low-income people have to unfortunately resort to coping mechanisms such as putting children to work, eating less food, and selling productive assets. Drawing from savings reserves is also one of the main coping mechanisms to manage shocks. Recent data from Gallup reveals that 51% of Chileans, 47% of Kenyans, and 61% of adults in Vietnam say their resources would last less than 1 month. So resilience everywhere is really limited. Financial inclusion and access to insurance have a pivotal role to play in helping people cope with the impact of the pandemic. Many governments have responded to COVID-19 by giving money directly to citizens through digital channels. This has created momentum to accelerate financial inclusion. This, however, is a short-term relief measure. To achieve lasting positive outcomes in the lives of the vulnerable, it is important that we focus on solutions promoting long-term resilience, namely savings and insurance. Insurance helps society to deal with severe shocks, whether these are health-related or due to natural catastrophes. For example, insurance played a critical role in managing the devastation from Typhoon Haiyan, which struck the Philippines in 2013 and claimed more than 7,000 lives. A 2019 study found that those with access to financial services, including microinsurance, were able to more easily repair damaged homes and restart their lives. Those without insurance payouts resorted to savings, sold assets, or sought help from family and friends. By increasing resilience, insurance contributes to achieving the Sustainable Development Goals. Insurance usage facilitates risk management and productive investment. It helps smallholder farmers and micro-entrepreneurs invest more in their businesses and take on more risk once protected. These outcomes contribute to many as 17 SDGs, such as inclusive growth, food security, climate action, and health. More can be done to accelerate insurance solutions for the world's poor to support both COVID-19 response and long-term resilience. Governments and regulators could swiftly pass enabling laws and regulation to facilitate more widespread insurance solutions. In recent studies, market actors have underscored the importance of clear insurance regulations that is proportional with the risks and nature of activities involved. They have also emphasized the benefits of integrating regulatory technology solutions into oversight approaches. Technology can allow regulators to make more timely decisions and supports transparency. Regulation must be complemented with the appropriate payment and settlement infrastructure, including interoperability between provider types. This helps vulnerable segments access insurance products more easily with fewer transaction costs and makes small-ticket insurance product possible. As tech-driven solutions become more common, ensuring that people have a minimal level of digital literacy is really important. There's also a need for policymakers to raise awareness and build the capacity to successfully use insurance products, as well as create consumer protection mechanisms to ensure effective recourse. The pandemic has further highlighted the limits of the old-fashioned insurance products, requiring new tech-driven solutions and innovative partnerships to address gaps. For example, Pula, a Kenyan agritech, has served 3.5 million African farmers by bundling insurance into agricultural inputs like fertilizers and seeds. Climate events result in farmers receiving a voucher for replacement seeds, a straightforward product that has scaled very quickly. In Indonesia, Access and Dana, a mobile wallet company, launched an insurance product in 2018 with premium of less than $2 for life and health coverages. These examples, which are designed with the needs and behaviors of low-income customers in mind and use digital payment technology, offer strong promise to reduce insurance protection gaps in emerging markets. Before I conclude, I leave you with a challenge. To achieve the SDGs by 2030, it is critical to accelerate insurance as a risk protection mechanism. Empirical research strongly shows the benefit of insurance to promote resilience against shocks in the lives of the underserved. COVID-19 has reinforced the need of these tools. However, to date, much of the financial inclusion community has focused on payments and credit-related interventions. It is therefore imperative to scale proven inclusive insurance initiatives and develop models that can be replicated across the world. The A2ii public dialogue provides a crucial platform to facilitate these advancements. Finally, I wish you fruitful dialogue today and encourage a singular focus on impact and action. I look forward to supporting you on next steps. Thank you.
Well, I think I would be remiss not to start with a big thank you to Her Majesty Queen Máxima for the video. and to her office, of course, for helping to facilitate the introduction that she's provided to today's discussion. I think we've heard a lot of terms in that video message that are probably going to be touched on today during the panel discussions. Things like proportionality, things like interoperability. I think, though, that one of the key things that she mentioned from my perspective is innovative partnerships. And when we think about innovative partnerships, I see that the partnership between the IAIS and the A2ii has been one of those innovative partnerships that's provided a platform for dialogue, discussion, and an opportunity for supervisors to come together and learn from each other about some of the key challenges that they face in addressing financial inclusion within their markets. Our next speaker, Mr. Peter Braumüller, the director at the Financial Markets Authority in Austria, also chair of the IAIS's Implementation and Assessment Committee, as well as the chair of the Access to Insurance Initiative, will be providing a welcome message for today's discussion. But before getting to that, I just want to reiterate what Queen Máxima had mentioned in terms of a challenge. I think all of us recognize that increasing access to insurance is critical if we're going to accelerate progress to meeting the Sustainable Development Goals in 2030. I hope that today's discussion provides a useful input into the various strategies at the local, national, and international level on how we can actually take concrete steps to accelerate this progress. So with that, let me turn over to the next video welcome from Mr. Peter Braumüller.
Good morning, good afternoon, and good evening. On behalf of the IAIS and in my capacity as chair of the A2ii, I'd like to extend a warm welcome to all participants joining us today for this public dialogue on insurance and the Sustainable Development Goals. I regret not being able to join you live, but I'm pleased to provide this video message and welcome you to this dialogue, which is part of a series of webinars that the Access to Insurance Initiative is delivering in partnership with the IAIS. Insurance contracts date back to the Babylonians and were well established among town guilds in Europe by the 14th century. Since then, these contracts have played a unique and vital role in society and in economy, allowing individuals, businesses, households, and communities to manage risks. Moreover, the risk protection provided by insurance is also a vital ingredient for sustainable economic growth, enabling calculated risk-taking and ensuring that we can rebuild when disasters strike. The IAIS's 2020 to 2024 strategic plan and financial outlook identifies financial inclusion and sustainable development, along with climate change, as 2 of 5 key strategic themes that are likely to shape insurance in the coming years. Our focus on both sustainability and climate risk go to the heart of the IAIS mandate to support our members as they protect policyholders and support fair, safe, and stable insurance markets to maintain financial stability. The IAIS recognizes that these topics are complex and that we must work collaboratively with interested stakeholders if we are to see meaningful progress. Take on work on financial inclusion and access to insurance, which is foundational for seeing progress on the SDGs. Over 1 decade ago, the IAIS recognized that we needed a multi-stakeholder approach. And as such, we partnered with development organizations, policymakers, and public sector donors to launch the A2ii. 1 decade later, we have seen progress on building enabling environments for increasing access to insurance and an increase in the range of risk management solutions available to traditionally underserved segments of the population. Most recently, the IAIS, in partnership with the A2ii, held the first plenary meeting of our new Financial Inclusion Forum. This forum will support members in sharing examples of best practices on financial inclusion. Peer exchange sessions later this year will target inclusive insurance data, financial education, and understanding customer needs. In looking at our work on climate change, insurance supervisors increasingly recognize the significant impact that climate change will have on the insurance industry. Building from this recognition, we were a founding partner of the UN-convened Sustainable Insurance Forum. This partnership has helped to raise awareness on climate risk in the insurance sector, and now focusing on helping supervisors to integrate climate risk within their supervisory frameworks. In fact, we are in the final stages of developing an application paper on climate risk, which will hopefully be published in the coming months. In addition to our key partnership with the Sustainable Insurance Forum, we will work cross-sectorally by providing an insurance perspective to the climate work of the Financial Stability Board and the Network for Greening the Financial System, the NGFS. Lastly, let me take a moment on COVID-19 and the protection gap. In addition to the severe economic and social toll of the pandemic, COVID-19 exposed the sheer magnitude of the insurance protection gap. At the IAIS, we are currently undertaking a stocktake of steps being taken to address the protection gap. Here again, we are working closely with the A2ii, including through organizing a series of webinars that explored the pandemic risk protection gap. I anticipate this work will also help to inform how we at the IAIS approach other protection gaps, such as the significant natural catastrophe protection gap and the accelerating retirement income protection gap. In closing, let me say that the challenges we are facing both now and those on the horizon require us to work collaboratively through a truly multi-stakeholder approach. So too does advancing global action, promoting inclusive growth, and implementing tools and programs that integrate insurance and build resilience. The A2ii and the IAIS provide crucial fora to facilitate this coordination. Continued efforts to raise awareness and share progress are fundamental. This, together with capacity building as well as continued dialogue, such as the one you are participating in today. I wish all of you an informative and engaging dialogue, and I would like to thank you for your ongoing support and engagement.
Well, thank you very much to Peter for those welcome remarks. And I think what we heard was a lot of perspective that's complementary to the video message that we heard from Queen Máxima. I'd like to take the opportunity to thank both of our keynote presenters again. And with that, take the opportunity to turn it over to my colleague and friend, Hannah Grant, the head of the Secretariat at the Access to Insurance Initiative. Thank you very much and happy Earth Day.
Thank you, Connor. And yeah, thank you for your words, and also, for Peter there representing the IAIS and really talking about the high priority that the IAIS is placing on helping its members meet sustainability challenges and the concrete ways that it's doing this, both through its work on climate risk and helping supervisors deal with some of the financial consequences coming out of climate risk, as well as its agenda on access to insurance. And I think my colleagues have actually just shared in the chat some of the documents that Peter referred to there in his address. Next, and actually just before we move on to introducing the panel and getting on with the panel discussion, we'd like to do one polling question using Mentimeter. And the question that we'd like you to respond on is from the 17 SDGs. Which one do you think insurance has the most impact on? And while I'll leave that slide up, and while you're actually responding to that question, I will actually go ahead now and introduce the speakers, and after that we'll come back and have a look together at the results. So we have today 4 great speakers, each representing different key actors in the insurance sector. And actually this is important, as to take the SDG agenda forward, it does require all insurance stakeholders to work together. First, I'd like to introduce Craig Churchill. Craig has more than 2 decades of microfinance experience in both developed and developing countries. In his current position as chief of the ILO's Social Finance Programme, he focuses on the potential of financial services and the policies to achieve social objectives, a topic very much at the core of the SDGs. Through his decades of experience in microfinance and the ILO's impact facilities work, he brings with him rich experience on how insurance solutions are being used to support countries in meeting their SDG commitments. Welcome, Craig. I'd also like to introduce Susan Holliday. Susan is an advisor to the International Financial Corporation and the World Bank, where she focuses on insurtech and insurance for SMEs and women. She also brings with her rich insurance industry experience from serving on a number of insurance sector boards, as well as her time previously as a managing director at Swiss Re. Susan is the author of a forthcoming report by the World Bank on the insurance sector's contribution to the Sustainable Development Goals, and I look forward to her sharing some sneak previews of this research later on in the panel. Welcome, Susan. Next, I'd like to introduce you to Garance Wattez-Richard. Garrelts is CEO of AXA Emerging Consumers, a business she founded in 2016 that aims to protect the underserved populations from low to middle income countries across emerging markets, and actually increasingly in mature ones. AXA Emerging Customers is a real industry leader in making protection relevant and accessible to more segments of the world's population. So it would be good to hear more about this from Garance during the panel, as well as get her views on what actions are needed now for other industry players to come on board to scale up these efforts. And finally, but certainly not least, I'd like to introduce you to Christiaan Henning. Christiaan is a senior analyst in the Industry Technical Support Department of the Prudential Authority in South Africa. Christiaan is their lead on sustainability issues, and in this context represents the Prudential Authority in the UN-convened Sustainable Insurance Forum and the Macroprudential Monitoring Working Group of the International Association of Insurance Supervisors. He is also the chair of the Prudential Authority's Climate Think Tank. International collaboration is important, and insurance supervisors have a vital role to play here in helping lead insurance sector efforts. And it's great to have Christiaan on the panel to share some of the good work the South African Prudential Authority is doing in this regard. Now, let's see if we have, before, so as I say, getting to the panel, and I'd actually encourage the panelists now to turn your cameras on. And I don't know if we have the results now from the Mentimeter poll. Okay, I've been informed by my colleague that the results are going to come a little bit later. So instead, let's get straight on with the panel discussion. And I would like to start here actually with Garance. I think as we've heard from our 2 keynote speakers, insurance is a key enabler for the SDGs, and many insurance products and services already support these goals. AXA Emerging Consumer is one of the industry leaders in making protection relevant and accessible to more segments of the world's population. Please, can you share with us some examples you have seen where insurance solutions have been harnessed to meet the objectives of the SDGs?
Thank you, Hannah. Can everyone hear me? Can you hear me?
Yeah, we can hear you well. Thanks.
Oh, and the video has just appeared. Thank you for this opportunity to participate in this type of discussion. So in terms of examples, and I think that's the best way to do things is just to talk about concrete elements. Inclusive insurance as a risk protection mechanism, obviously, like many other things, is relevant to achieving the first goal, right, of no poverty, but at least 5 other goals, plus this the overarching one, right, which is partnerships for the goals, which are no poverty, and I don't say them necessarily in the right order. I mean, no poverty, zero hunger, gender equality, decent work and economic growth, good health and well-being, and I think it's called climate action. But if we go back to my first point, providing a safety net to prevent the emerging middle class, so not at the very bottom, but just above. Not that the very bottom isn't key, but so is the segment just above. So the emerging middle class, let's call it, the low income to mass market segments, from falling back into poverty, is key, and not the one that's honestly always the most spoken of, but this emerging middle class actually feeds a lot the bottom of the pyramid. We've looked at different reports, and of course the methodologies aren't always comparable, but in order of magnitude, about 100 million people each year fall into poverty, so go from the C and D levels into E, due to, in particular, unexpected health-related events and associated expenses. A particular example we came across is that in Kenya, 44% of households that had escaped poverty had fallen back into poverty 6 years later, which really goes to show you that it's just as important to focus on the bottom E, let's say, segments as the C and D. So today I wanted just to give you one example that touches upon several of the goals of the Sustainable Development Goals that I've just mentioned, and it's a partnership that AXA has with the LEAD Foundation, which is an MFI in Egypt. And it touches upon no poverty, gender equality, good health and well-being, decent work, and growth. 88% of this portfolio, or almost 90%, I think, are women, micro-entrepreneurs. And the idea here is that with the insurance products provided, there's no pre-exclusion, there's no waiting periods, there's no exclusion from maternity, accidents, etc. And so for 90% of the customers we cover today, with this MFI, this was their first ever health policy. And as we know, one very important point is that you don't get often a second chance to make a good first impression. So the idea here was to move from covering 200,000 borrowers to approximately ×3 that, to create a family cover, to cover 600,000 children and spouses also. And this, what does it do? It empowers women to economically then take care of their children. It includes things like specific maternity coverage, specific maternity obstetricians, OBGYN, and I always get that wrong in English, launching teleconsultation pilots that reduces time and cost burdens, etc., etc. We know this, right? But the idea is to say, thanks to this, there's being innovative, there's testing, but then there's scaling, and there's replicating. So this has now been able to, we've almost reached 1 million customers through this particular MFI, but more importantly, used it as a track record, which I think is often important in partnerships. We use this as a track record to then now have implemented a project like this with 7 other MFIs in Egypt. And I think we're going to cover mostly all of them. And I would love it that if other insurers also did that with other MFIs, other financial institution lending agencies, because we have realized that going through loans quite often, be it to pay for health or a productive loan, is what enables us to speak more directly and to have closer touch points with the population we're trying to protect.
Thank you, Garance. And I think your example there clearly, I mean, we could understand why that product is important. And as you say yourself, I hope through discussions like this, that others will come on board and we can make sure that more people can take advantage of this type of protection that the insurance sector really can offer.
Yeah, I would love to be able to say to you, Hannah, sorry, I'm sorry, I can't give you too many details because, you know, this is intellectual property or whatever. If we were at a stage where we were competing to protect the world's most vulnerable, I would actually love that. I think we're at a point where it's not sharing the pie, it's probably putting it in the oven together. And maybe we can start competing over the shares of the pie in 10 or 15 years if we're optimistic.
No, nice. And there, I think people, you have an offer then. If you want to know more about how to access this low-income market and the tricks that AXA have been developing, I think Garance would be happy for you to reach out to her. Turning next to Craig. So what has struck you most about the current pandemic? And in which ways do you think insurance can support recovery efforts and help ensure countries remain on track to meet their SDG commitments?
Thanks, Hannah. Maybe stepping back just a couple of steps. You think of the pandemic primarily as a health challenge. And what's interesting, if you look carefully at the SDGs themselves, the objective under the Good Health SDG, number 3, is universal healthcare. That's really the focus, is how do we get everybody to have a basic coverage of healthcare. And so I think it's really interesting for insurers to look at that and say, well, how does that fit? What contribution can insurers make to SDG 3, to the attainment of good health? And it could be in a number of different ways. It could be helping governments to implement national health schemes. So being the sort of the implementing bodies, and there's a number of countries where governments are partnering with the insurance industry to be able to extend universal health coverage to the whole population. It could be that they actually do the underwriting themselves, and so they're tasked with the process of underwriting. So it's not just distributing, but also carrying the risk, and that's another sort of model that could be involved. And then the third approach would be more of along the lines that Garance was talking about, actually, which is more of a complementary cover, so that some of the basic healthcare benefits are provided through the government scheme, but there's a limit to what the government can provide, and so the insurers then can complement, supplement, and fill in some of those gaps that are there. So I do think that that's sort of one angle in this in the pandemic right now, is to say, okay, there is a global health crisis that needs to be tackled. Where are the opportunities for the insurance sector to step in? And I think on the health side, that's one of the areas where I think we've been pleasantly surprised, or say enthusiastic. Insurers have seen this as an opportunity. This is a crisis, and this is where insurance is needed the most. And so rather than saying, oh, the pandemic is excluded from our policies, even if it wasn't mentioned explicitly, coverage for many policies that provided healthcare, insurers decided to include COVID coverage into and provide those benefits, which I think is a great step. I think the other sort of risk that has emerged from the pandemic has been sort of business interruption risk, and that especially small enterprises, certain sectors, tourism, restaurant sectors, have to close down. People weren't able to have their incomes. I think this is an area where it was almost too late. That by the time the lockdowns came, people didn't have coverage for this business interruption, and so the products weren't available. And so this is, I think, a big, a lost opportunity, perhaps, or at least maybe it's an opportunity now, as you never know when the next wave is coming. So let's get the products out. But I haven't seen. I'd be interested to hear maybe from Garance or others if there are some innovations taking place on that business interruption side, because I think that's where there's a bigger gap that I've seen than on the health side, anyway. So those are the two pieces I think that fit in terms of how the pandemic and the SDGs and insurance all sort of come together as a nexus.
Thank you, Craig. And I think I'm hearing you talking about SDG 3, I guess in particular, but then also SDG 17 on the partnerships. So the way the insurance sector can also complement what's already there in social security systems. And you definitely raised,
Is on SDG is the decent work one, which is the one that ILO is most interested in.
Yeah, which is the one also where the insurance industry gets an explicit mention. So there's always also a link there, but I think that's also where the challenge is, though, on the decent work and economic growth, because that's what you were talking about with the business interruption coverages and whether the sector was playing as big a role as it possibly could. And I think we can maybe put the question to Garrelts later on to see if, or others, let's just say also participating in the call today, if they can share some examples of coverages that are starting to come out on pandemic risk. But this is also actually a topic that the A2i is discussing with the IIS, and we do actually have a separate webinar coming up later in the summer where we will be looking at the pandemic protection gap in a little bit more detail. But thank you both, though, Craig and Garance, for the quite concrete examples there of how insurance is building resilience and playing a key role in development. But it's not that widely recognised outside of our sector. And I'd like to sort of turn to Susan now. And what do you think the bottlenecks are in establishing the link between insurance and the SDGs? And how can we better integrate the impact of insurance?
Thank you, Hannah, and thank you for inviting me to participate in this interesting webinar. As you mentioned in your kind introduction, at the World Bank, we have been doing some work on this, which hopefully will be published before too long. So by way of background, I'd just like to give the participants a little bit of an idea of how we looked at this. So we looked at a lot of research that had been done about insurance and SDGs, but we also looked at various kind of dimensions. So the first one was thinking about the transmission mechanism. So households, businesses, and the public sector, which has already been mentioned. Then we looked at, okay, what's the impact on economic growth, social inclusion, and environmental? What are we really addressing? And then we looked from the point of view of insurance companies. What do they do? And we broke this down into 3 areas, being underwriters and facilitating risk transfer, being investors, and also being corporate citizens and employers. And with that, we tried to look at, okay, where do we think, and yes, this is a matter of opinion and it's qualitative, but insurance can have the biggest impact. And interestingly for us, it wasn't SDG 8, although that is important, which is the only one where insurance is explicitly mentioned. We actually found some other ones, 13 on climate action, 11 on safe cities and communities, SDG 3 on health, that's already been mentioned, 10 on reducing inequality. And then we found some others, SDG 1 on poverty, SDG 8 indeed on economic growth and employment, and SDG 2 on hunger and food security as being the next most likely that insurance can really play a big role. So that's quite a lot of SDGs. So why is, isn't there more kind of like happening here? So I think there are a few issues perhaps. One is it's been considered very much at the kind of big impact level. And it's great today that Garance and Craig have given us real concrete examples, because if the sector and all the stakeholders are just looking extremely big picture, then probably nothing will get done. So for me, it's important for industry players to pick certain goals, which maybe are the ones that I mentioned, maybe they're not, which they think they can really influence. And incidentally, this is the same as how IFC looks when we're doing investments and we're looking a priori at the social impact of the investments. You can't just say, oh yeah, it's great and it's going to have a positive impact on everything. You have to pick specific things for that company and for the market and be really explicit about them. So I think that would help. There's definitely a challenge in that the indicators as they are don't pick up the kind of things that show what the role of insurance. And, there are all these trite cliches about what gets measured, gets done, and all the rest of it. But, the cliches there for a reason. So I think it would be interesting, if either individual companies or industry bodies could maybe come together on some definitions and some things that they're going to track. Because if the industry doesn't get any credit, and if investors and governments and regulators and NGOs and other stakeholders can't really easily see what the insurance industry is doing, then it's not really encouraging the companies to focus on this. So I think those are some of the things that potentially could be addressed.
Thank you, Susan, and you raised some really important points there. And I think, I mean, the starting point from what, or one of the starting points from what you were saying is, I mean, we're looking at the SDGs themselves, and underneath them, I think there was 169 different indicators developed for countries, governments to use to track progress against the SDGs. And you were saying that not any of them actually include insurance. So although
there's one mention of insurance in SDG number 8, which for our work was a little bit ironic, because whilst it's incredibly important, we actually thought some of the other SDGs were even more important as far as the role of insurance is concerned.
No, true. And I think this also calls for the need for us to understand better the impact. And we're very much looking forward to your report coming out. And actually, this is something the A2ii itself has also been looking at. And we did a couple of weeks ago publish a report looking actually at also the impact of the insurance sector on the SDGs. And from a supervisory perspective, we did develop some key performance indicators to sit underneath, and we identified 9 sort of key SDGs. So some key performance indicators that actually supervisors can use themselves to try and get a better picture of the impact that the insurance sector is having on the SDGs in their country. And I'm also agreeing with you there. We narrowed it down to 9, which sounds maybe, again, slightly different, maybe from the ones that you have picked out. So I think we all need to work collectively probably to have a more of a united view on the impact of the insurance sector. But it's also talking about the need to be efficient. We can't look at 17 SDGs at the same time, and we do need to pick out a few key ones to start on. And from that, we can then take the discussion forward and then bring it to sort of policymakers' attention. Christiaan, I'm going to turn to you now, and I'd be keen to hear from a supervisory perspective. I mean, what are the challenges of integrating the SDGs, and how are you overcoming challenges such as the lack of research and data that we've just touched on now?
Thank you very much, Hannah. Just to do a quick check, am I clearly audible?
You are, yes.
Thank you very much. Just to say thank you again for this opportunity and being part of this webinar today, and in the presence of such greatness as Her Majesty Queen Máxima. As regulators and supervisors, we are very much focused on the health of financial institutions in order to ultimately, obviously, protect policyholders. Now, we do see an increased focus on financial inclusion and financial stability, because I think it's recognized now that, you know, a healthy financial system is very dependent on a healthy socioeconomic environment, as well as a healthy financial system. So if we have those two things, we have, you know, healthy financial institutions, and healthy financial institutions will help to protect lives and livelihoods. Now, these two aspects can't be achieved without having a thriving natural environment. And I guess that's why the SDGs are so important, because the SDGs actually brings together a couple of goals that we need to achieve in order to get those two important aspects: a healthy socioeconomic environment and a thriving natural environment that we can build on. So the SDGs are great and very important, but why is it so challenging for supervisors to actually integrate this into our supervisory and regulatory frameworks? So I guess there's a lot of reasons, but I'll mention a few that I thought was quite important. And the first one is actually awareness. Now here I don't mean being aware of the SDGs or its purpose or the role that it plays, but I think being acutely aware of these goals when determining strategic objectives. Our mandate as supervisors is clear, but what is not so clear sometimes is how not meeting or meeting these goals can either contribute or hinder our strategic objectives, or us in achieving our strategic objectives. So we need to create stronger links between these goals and how it will influence the financial system and ultimately contribute to risk in the insurance sector. So the more we know about how the insurance sector can contribute, but also how it's affected by the SDGs, the easier it will be for us to actually integrate these into our objectives and our daily work. Another important aspect is actually the operationalization of the integration into the strategic objectives. So what I mean by this is supervisors would need to upskill and train frontline supervisors and risk specialists on the SDGs, its purpose, and how it actually relates to the financial system, and more specifically, to the different risks that each of these employees are involved in. So supervisors should also engage more on the topic when dealing with its supervised institutions. So this is both from an off-site perspective, but also very much from an on-site perspective. Now, I'll touch on this a little bit later as well. Now, how do we actually understand a bit more around how the SDGs actually would influence the financial system and could actually influence the financial system? And I think there it's basically talking to research. And I think when I mention research, I actually also refer to time and resources. So each of the SDGs are an extensive topic by themselves. And one really needs to spend a lot of time in understanding how these would actually, contribute or deter, our strategic objectives. So a further complication is also the potential interaction between these SDGs. So making sure that we don't achieve one at the cost of another and try to achieve these in harmony as far as possible. So the important point, I think, is not to overthink and complicate the matter, but actually to start simple and show some tangible traction in a lot of cases. So it would probably not be feasible from a supervisory perspective to actually in-house create full-fledged research teams that will look at all of these SDGs. I think here, we can look actually elsewhere. There's a lot of research out there being done. So it's often a matter of bringing these research together and to contribute and influence these studies as far as possible from our perspective. And linking into academic conversations, academic communities, and research groups. So I would say that I think dedicated sustainability teams and specialists within a regulator can actually help to drive these initiatives forward and bring things together for, in the regulatory space. So frontline supervisors and risk specialists could also be allocated specific time to actually grow in their understanding of what this would mean in their specific role. Now, in understanding this a bit more and to actually lead into meaningful research, one can only do that with good quality available data and usable data. So in terms of that, I actually want to present 3 points. So the one is the availability. So in some cases, there's a lack of data. Now, I would go one step further and say it's actually more about a lack of relevant good quality data. I think this is an area that has significantly improved over the last 30 years, and I think it continued to do so. The question here is, apart from the need to have data to inform supervisory practices, I think we also need to look at ourselves and see how we can contribute to this data set and how we can actually enhance our own private reporting and public disclosure requirements to actually give back to industry and to add to this conversation. But I think it's not just about the availability, it's also about awareness and sharing. So it's not always the lack of data that's a challenge, but actually being aware that some of these data elements actually sit somewhere, either at someone we know or at someone we don't know. And we need to make sure that we get a good grasp of where one could find these different data elements when the need arises. So I think here there's a couple of things that you can probably do. I think one idea is to create discussion platforms, data sharing platforms, national data repositories, although I think that is maybe something a bit for the sort of later future. But maybe as a starting point, something like data repositories that index data sources at least. And having a good idea of where one could find data elements of certain parts. And then obviously, lastly, but not least importantly, is the quality of data. So how can we actually enhance and contribute to enhancement of quality of data? So I think that would be my quick sense in terms of a couple of things that I think we can do to actually contribute and integrate these things quite effectively.
Thank you, Christiaan. And I'm hearing from your side as well about we do need to work on getting a better data picture together. But as you say, it's not necessarily data that isn't being collected at the moment, but it could just be an improvement in the quality of the data or just better usage of the data maybe that's already there. But it was also nice to hear some ideas of, even without the data in some ways, how insurance supervisors can, and in your case, are taking leadership in the market, sort of forming or developing national repositories and bringing sort of stakeholders together. Which actually brings me on to my next question. And actually, this is another question for you. but then looking at, so how can sort of supervisory mandates, policymaker goals and industry objectives better align in order for the sector to better contribute to the SDGs?
Thank you, Anna. Yeah, I think this adds to a lot of the conversation that we had a couple of minutes ago, and that's around communication and collaboration. I think that's key. I think at a high level, there needs to be a much clearer understanding of the role that each of the stakeholders actually play in achieving these goals, and which of these goals, at least. To drive this, I think there would need to be commitment and drive from each of the stakeholders' perspective to unpack what achieving the SDGs would mean from their context. Information sharing and open communication, I think, between stakeholders about the intent and motivation behind policies, regulations, and/or innovations is quite important. And through workshops and discussion documents, some of these objectives could be achieved. Regular engagements to get a sense of future plans and objectives, I think, is an important point as well, so that everybody is more or less in line with, where each of these stakeholders are heading. So tangible initiatives with appropriate indicators, I think, can go a long way in monitoring over time, these sort of role objectives. And I think we have to look for opportunities to develop partnerships and programs as well as far as possible to get certain messages across, at least to different audiences. From a supervisory perspective specifically, I think supervisors would need to be mindful of its role in achieving the SDGs when it comes to its regulatory and supervisory frameworks. So I usually try to always think of it in those two things. So the regulatory framework separate from the supervisory framework. So I guess a couple of questions that we need to ask ourselves is, does the regulatory framework actually deal effectively and efficiently with the risks associated with not achieving the SDGs? So is the regulatory framework flexible enough to allow for opportunities and innovation that may come from the insurance industry in trying to fulfill their role in achieving the SDGs? So where it is not flexible, how efficient are our processes in updating our regulatory frameworks to actually deal with these things? In this regard, I think regulatory sandbox environment and innovation hubs will go a long way in speeding up this process, and hopefully trying to implement some of these solutions as quickly as possible. If we just look across those three pillars in the regulatory framework, so looking at pillar one, which is the capital requirement side, I think there we need to ask ourselves, continuously, are the calibrations still relevant, and is the risk landscape still captured appropriately, given new information that we might have on the SDGs. And on pillar two side, how can we enhance our requirements in terms of risk management and insurers' own view of their risk assessment? Is there perhaps here space for guidance in terms of what we expect companies to actually look at when they consider SDGs? And also basically raising that awareness in a more sort of mandated way. And then from a pillar three perspective, can our reporting frameworks be enhanced to not only add to our private reporting purposes, or for private reporting purposes, but also ultimately trying to enhance our public disclosure requirements in order to give information back to stakeholders. In terms of the supervisory framework, I think the role that supervisors play in achieving the SDGs needs to be communicated and understood, I guess, across and within the supervisor. The roles and responsibilities of staff could be enhanced to actually set some expectations for staff to understand their specific role in the contribution of this bigger picture. And guidance can potentially be provided to supervisors and risk specialists to help them engage with this topic, either from an offsite perspective, but also from an onsite perspective.
Thank you, Christiaan. And I'm glad, we still have Connor from the IAS, with us as well here, because I think there's a lot of useful points you're making about how you need to align what you're doing on the SDGs with your supervisory mandates, and the value really of the peer exchange with other supervisors to get an idea of ways I think this could be done. And so I think the IAS, obviously, can play an important role here, both in the supervisory exchange, but also in supporting the discussion on how this aligns with the supervisor's sort of traditional consumer protection and financial stability mandates. Moving on then to my next question, we're all still sort of focusing on sort of multi-stakeholder partnerships and collaboration. This is a question I will give to actually Susan, Craig and Garance, I think in that order. So is the way forward now for insurance to be more accessible for attaining the SDGs? And Susan, if you would like to have a first go at this.
Oh, thank you. So I do a lot of work in the insurtech space and on new business models and all that kind of thing. And I'd like to pick up on one of the points that was just raised about consumer protection, because I've seen this over and over again in my nearly 33 years in the industry. And I think we have to acknowledge that there is a tension, and it's not a bad thing, between consumer protection and access, or certainly access at prices that anyone can afford. And everyone probably agrees that both extremes are bad, but the question is, on the spectrum, where do you set the regulation? And different countries have kind of approached this in different ways. But in my view, you know, people need to constantly keep this in mind. Is the regulation that's trying to protect people, which is a good thing, but is it so onerous and so costly and making the process so slow that it actually means that certain groups don't get access to insurance? And that tends to be mass market consumers, but even more so the smaller end of SMEs and other underserved groups, such as women, which is an area of passion, at least for me and Garance. So I think we need to look at, you know, how can insurance potentially be, I kind of hesitate to use the word embedded, maybe I'll use bundle, but I know that's also kind of like triggering as well for some people, but, you know, be provided alongside other products. Who is allowed to distribute insurance and how? Sometimes there are some really arcane rules like wet signatures, or not allowing certain relatively simple products to be kind of sold in a digital way, that to me in the year 2021 absolutely make no sense. So I think, you know, it was just mentioned that regulation is always by definition probably going to be behind the reality, and we've seen a jump in terms of usage of kind of digital self-service business models, all this kind of thing, because of COVID. But that's also an opportunity. So there's no absolutely right or wrong answer, but I guess what I'm asking for is kind of a balance between having regulations and protecting people, but not making it such a long-winded process, so expensive and so difficult that people either can't or won't actually be able to access insurance.
Thank you, Susan. I think that resonates with what Her Majesty Queen Máxima was talking about at the beginning of the need, the importance for, I think she called it proportionate regulation. But getting the right balance between market development and consumer protection is, you know, is a real challenge, I think, as well. Craig, if I put the question to you as well, so does insurance need to be more accessible in achieving the SDGs?
So in the context of collaboration and partnerships, I think, you know, maybe there's two different sets of partnerships I want to highlight. One is, so as Susan was talking about, the distribution partnership, which is, you know, obviously one of the most important pieces in the puzzle. One of the sort of the new actors in the distribution piece, but it's more than distribution, of the fintechs. And I think what's interesting in the models that you see evolving is, you know, fintechs are, you know, nimble, and they come with new ideas and new approaches, very tech savvy. And the insurers, sort of the legacy sector, struggle to keep up. And so they're trying to figure out, okay, well, how do we do this? And so there's sort of two choices. One is to either partner with fintechs and work with them, or buy them, and then or develop in-house solutions. And I guess I'm trying to figure out, you know, from a supervisor's perspective, is there any advantages or disadvantages to these different options? I guess one of the disadvantages of, you know, insurers buying up fintechs is that then the insurer has the sort of all the control over that technology, and instead of that technology being used to expand the market in general with lots of different insurers, the insurer who buys that fintech ends up being able to capture that intellectual property. So that's sort of I think one of the interesting dimensions on partnerships that would be worth thinking more about and looking into in more detail. The second sort of bundle, not bundle, because Susan didn't want to use that word either. The second type of partnership that I want to mention is public-private partnerships. So this is really looking at how government can look to the insurance sector as a potential ally to achieve public policy objectives, especially the SDGs. And it happens in particular in two spaces. One is agriculture / climate insurance, and then the other is on the health side. And I mentioned the health side earlier, but I do think for insurers that they need to think, how do they position themselves so that they can get the trust of governments, and so that governments are willing to work with insurers. And then for regulators, you can potentially play a really interesting bridge between industry and sort of the policymakers in the ag space or climate space or health space, because you're trying to see how your industry can help the government to achieve its objectives. And I know it's not the typical role of supervisors, but if you really are thinking about supervision and the SDGs, creating that bridge to policymakers and seeing how the sector can to help to achieve public policy objectives, I think is a really exciting role. I'd like to see if there's any examples of people who are attending this of where they've made that link and been able to sort of enable the sector to help ag ministry or the health ministry to collaborate with the insurers.
Thank you, Craig. And I don't know if Christiaan, you raised a couple of questions there, I think, for supervisors on your approach to sort of new fintechs and things coming into the market and how that worked, and also your interaction sort of domestically with policymakers in terms of highlighting the important role, I guess, that insurance plays and yeah, supporting, enabling dialogue in the country to get more sort of, and now allow insurance to play a bigger role. So if you have any quick comments there before I return to Garance.
Yeah, so I mean, there's a couple of interesting comments made by Greg. I think there's definitely merit in some of them. I think the focus, I think, should just always be that insurance companies' focus should be on actually providing insurance. I think the more you actually move away from trying to protect life and livelihoods and try to focus on, for example, investing in fintechs or building fintechs, then obviously you might lose some focus in terms of your actual, important objective in protecting lives and livelihoods. But in saying that, I think there's an important role that insurers can play in actually boosting the development in the fintech space. And I think the fintech space will play a big role in how insurance will look into the future, and actually how insurance can be provided to those actually financially excluded currently. So I think that's a massive role, and I think that's something we need to really engage with as the supervisor. I think just one example in our case, I mean, we've got a very innovative solution currently by one of our insurance companies in the index insurance space that's running in our sandbox environment. And that's trying to build on financial inclusion in the agricultural space and seeing how we could potentially, have these products basically legislated in a way in SA. So that is something that's currently on our radar. Just in terms of something that Susan said as well on the proportional regulation, I think that is a very good point. And in South Africa, we've basically established microinsurance regulation. So we actually license what we call microinsurance companies. And the aim of those companies is to have slightly limited regulatory or simple regulatory requirements that will hopefully keep the regulatory costs down a bit and enhance maybe the access to insurance in that sense. Now, we did see a pickup on that, but I think there's a lot of work that we possibly need to do on that going forward as we increase our learnings. But I think that's a very important point. It's this balance between ultimate protection, but obviously including more and more people. And I think the inclusion part is becoming increasingly important, seeing that the risk protection gaps are actually widening globally.
Thank you, Christiaan. And Garrelts, I've sort of left you out for a while now, so I'll be coming back to you. And it's the same question, actually, I asked Susan and Craig, and in the context of fostering multi-stakeholder partnerships. Is it the way forward now for insurance to be more accessible for attaining the SDGs?
I think it's at least one of the key way forwards. But before that, I just wanted to emphasize how much I agree with Christiaan in what he's just said. And it's true that in South Africa, we've seen this moving, in Nigeria also. But I would love it if this best practice could also start moving to Asia and Latin America. India is starting to look at the possibility of allowing for standalone, what they call SAM, standalone microinsurance companies to be created. And I'm not sure yet what the regulation would look like, but it would be a pity if it didn't look like the ability to enable insurers to have composite licenses on both business lines. I'm not sure that's going to happen, but I think the support of the A2ii and other key stakeholders in this area would be definitely needed, because it's very concrete. Yes, they've brought down the solvency and reserve requirements for microinsurance companies. Yes, they've simplified a lot of things, but we need to be able to go for composite, for a variety of other things, not limiting the commissions to too low a level, because that has the opposite effect, right? If you limit distribution commissions to like 5%, then nobody wants to file their microinsurance products under the microinsurance heading, because no distribution partner wants to distribute for 5%. So the devil is, as it is always, in the detail, along with the proof in the pudding. Those American English expressions make me laugh so much, but I think Christiaan was really very right in accentuating those points. On partnerships, it's not a panacea, but it's a key way forward, because we know that inclusive insurance relies on a business model of high volumes and small premiums, right? And that's been said time and time again. And so it's partnerships that allow us, private and public partnerships, to reach that scale. So if we just go quickly in less than 30 seconds on the journey, the 2000s was about inclusive insurance being distributed by MFIs, right? And this is actually what led to this very innovative project we're doing with the Lead Foundation in Egypt, I just mentioned, and lots of insurers are doing very innovative, scalable projects with MFIs. But then came, the panacea was, for a few years, telcos, MNOs, right? Because the scale that they would enable us to reach was 100-fold, 1,000-fold compared to MFIs. And if we look at a key project that was led in India, for example, Telenor, in less than 4 months, they reached 30 million clients, and quite a few of those used the insurance and actually made claims. Now we've entered what I really think is a third phase in terms of types of distribution partnerships in the private sector, at least, which is the digital economy partnerships, right? That enable us, that allow for both a wider reach and data-powered, cost-efficient operating models. So we know that, I'm not going to say this, every single person on the phone knows by heart that mostly in emerging markets, more and more in mature markets, low to middle income populations operate largely in the informal sector, right? So contrary to where social protection came from in the work contract initially, they lack automatic social protection and therefore employee benefits. And so one thing we're seeing is that we're trying to sort of piggyback or hop onto the bandwagon of the development of the gig economy. And partnering with these gig platforms enables us to reach populations that are principally in the mobility and in the delivery sectors, but that is tens and tens and tens of millions of people. The idea is obviously then, once we've accessed them, we need to focus toward a model that protects them offline, that protects them beyond their work, that protects them beyond their trips. If I just take the example of our Uber partnership, so let me reference the SDG goal, no poverty, decent work, and economic growth. Those are the two key ones, right? We're insuring about 150,000 drivers with just PA and third-party liability to protect the driver during the trips. I'm sorry to go into this detail, but that's what's important, is that partnerships enables us to start with the reason of being of the clients, of the customers, of the partners, but then it enables us to go beyond to what they do in the morning, in the evening, on the weekends, with their families, with their communities. It's sort of the entry point, like the entry point was loans and credit with my first point on lending institutions. Now it's what is their mobility or delivery driven job, and how can we then extend that, right? So if we take the Uber partnership, it's about reducing medical expenses related to accidents during work and protecting the driver from incurring liability costs. What about then, which is what we're doing, offering Hospicash with teleconsultation, mobile device protection? It's just examples. Bike insurance with roadside or maintenance covers. This is so important for livelihoods. And it sounds like I'm being very too detailed, but I really think that once we've looked at the regulation, which is the big block that's essential for the development of this market, the second one is distribution, to your point. So, of course, it's not only about private sector collaboration, it's also about public sector. But I think Craig touched upon that, and in the interest of time, I'm not going to go into that, any kind of detail there, but I just wanted to mention public sector cooperation is actually very key also.
Thank you, Garance, and also sharing the very nice examples there about how improved distribution channels can also improve accessibility, along with better product design, and some really concrete examples of where that has been taking place. I do have one more question, but before that, I'd actually like to turn to the chat, because we've had quite a few comments and questions coming through. And I'm going to read out a question actually from Dave Schneider. And I think this one actually is for you, Christiaan. And it says, for insurers to play the desired role, they must be able to make a profit and protect their solvency. What regulatory practices will enable these things in the context of the SDGs?
Yeah, I mean, that is quite a difficult one in the sense that, yes, so insurance companies' aim is to make profits. So I think it's probably a combination of a lot of things. So I think on the one hand, to provide cost-effective solutions to a wider population would probably require some sort of a proportional approach on your regulations, just in terms of the fact that you can't have Uber protection at the low cost. So, and in order to actually still being able to make profits basically at sort of that low level of insurance, I think it becomes quite tricky. And I think that's the part that I think we need to really put our heads together and think about how that could look, a framework like that. But how, from a consumer protection perspective and a market conduct perspective, we can actually also communicate very clearly what the difference would mean in terms of protection. Because I guess that's the problem with having proportional frameworks as well, is policyholder expectations when it comes to claims payouts and protection. And so I think those things are very important to balance. There's one more thing I wanted to say on that, but it slipped my mind now. Maybe if I think about it, I'll come back to that.
Sure. No, thank you, Christiaan. I'm going to move on now to some of the questions and comments that are coming through about the lack of research and data. And there's a question asking what can be done about ensuring that insurance, risk and resilience are explicitly recognised as the indicators being used to measure the achievement of the SDG targets. I think, this, yeah, does anyone want to take this question?
Well, I think it's part of, sorry, this is Garance. I think it's part of the answer of the next question you were going to ask anyway, right? So it's a good segue, and we don't need to actually go in that process, and we'll probably be answering it anyway. But it's funny that the person wrote those 3 indicators in that order. And I don't know if I got it right, but I went through in detail the SDGs. You probably know them much better than I do. And as we've mentioned before, so insurance is mentioned once out of 169 targets, and it's not included in the 231 indicators that are used to track progress. And then risk is mentioned 3 times, and it's only 6 of those unique indicators. And then resilience is mentioned once, and is included in none, right, of the indicators. So it's true that what we've been thinking with you, Hannah, through the IDF, with the MIN, with people, I know Craig has this type of idea on his mind also. It's to, from a collective industry viewpoint, I would say we need to develop a global reporting by insurers, right? And an idea would be within the IDF to track progress, having a go-to place, which is very complementary, for example, to what someone like Craig does, which is essential to this business in terms of training and innovation, etc. But here it would be a tracker, because it's impossible to track progress without monitoring, right? So having the IDF would be sort of a facilitator or a pusher to track progress of inclusive insurance growth or expanding reporting, similar to what's done, right, for banking, for example, within the World Bank's Findex, which measures, as we all know, every 3 years, the penetration of banking and payment services, but where the silence or the absence of insurance is very loud. And so I think that this need for objective setting and measurement on the insurance side would be translated, right, by the companies to their staff through individual and collective objectives. I don't know if this is too detailed, but for example, if we look at what AXA is doing, and I would love to get challenged or have more ideas on that, our performance on the DJSI, which ranks insurers, as you know, based on environmental, social, and governance criteria, impacts long-term incentives for employees, and this is the case since 2016. There are a variety of things now, indicators like gender equality, access for women, that touch upon several SDGs, which again are part of the incentive. So could the answer to the question be developing a global reporting by insurers, but developing a global tracking by a consolidating body under the aegide of the IDF, for example, led by the main in collaboration with Impact Insurance of Craig? I think that would be very, very strong, and it would be a go-to place, sort of ground zero from which we would track progress and where everybody would go. The UNDP is obviously key in this, and so are the multilaterals, but I really think that this could be an acceleration on what everyone is trying to do. Sorry, that was too long an answer. I'm sorry. And that answered your next question. I'm sorry about that too.
No,
it's
it
my
was
enthusiasm.
Great. And I actually want to put what you raised there to Craig and to Susan probably as well. I mean, what do you think of Garence's suggestion or action proposal, we could say there, for us to work collaboratively as an industry to develop sort of indicators to track and monitor the performance of our sector against the SDGs?
So we're operating at a couple of different levels here. I mean, what Garance is talking about primarily is sort of outreach information, number of people insured and under what types of policies. But what I think the question was trying to get at is, so if somebody does have, insurance for their business, does that mean that they're creating decent work? So it's much more at the household or the business or the client level impact. And so I'm not saying we need one or the other. We actually need both. We need to have the sort of broad-based outreach sort of tracking, but we also need the evidence that the products that we're promoting actually contributes value to small enterprises, to low-income households. And I think we've got a pretty healthy set of evidence that insurance matters on the health side. I think there's a number of rigorous academic research that really backs up that people who are insured versus people who aren't insured have much better sort of economic and health outcomes, and it's I think it's quite compelling. And there's also some evidence in the agriculture space that farmers that are insured are more willing to plant bigger plots and make more investments in fertilizer, and so that should generate more income. So there is some evidence on that side. But on the business side, whether businesses are insured and whether they're contributing, those businesses are then being able to increase their incomes or create more jobs because they're insured. I agree that there isn't a link that I'm aware of. And I'd be very interested to know if there's evidence about that. And that's an area where I'd love to see more research done, is to show if there is impact at the enterprise level, that insurance does contribute to increasing incomes and improving working conditions and creating jobs.
Thank you, Craig. So just, see if I'm understanding correctly, you're saying we should probably prioritize certain sort of SDGs almost to see what our impact is, because on some you feel we already have actually quite a good impact story, and we should probably pick out some of those that our story isn't as clear at the moment to monitor, and then put together a clearer picture of how insurance contributes.
Said it much more articulately than I did.
I'm not sure. Susan, from your research of the World Bank as well, and the paper that's going to be coming out on the impact of insurance on the SDGs, do you have anything you'd like to add here when we're sort of thinking collectively, I'd say now, on how we can try and better demonstrate the impact of the sector?
Yes, thank you. So at the risk of making things more complicated, but it is a complicated topic, and I think Craig just touched on this a bit, but obviously, inclusive insurance for relatively low income people, small business and so on is incredibly important. It's definitely part of the story, but it's only part of the story. So in my view, and this is backed up by the research that we did, which hopefully before too long you'll be able to read in the paper, insurance is already playing and potentially can play a much larger role in terms of what it's doing with large corporate risks. As an underwriter, we've seen insurance companies. I used to work for Swiss Re, and it was quite a long time ago that certain companies, including Swiss Re, said, we're not insuring certain types of fossil fuel businesses and so on, right? Just to give an example. Insurers are also massive investors. So they can move the needle in terms of what they invest in, what they don't invest in, and I think we shouldn't forget about that. So in terms of the impact of the industry, I think there are two issues. One is there's an impact today that maybe isn't being properly recognized, and that includes all types of risks, and as I say, in my opinion, as an underwriter, as an investor, and as kind of corporates, but it's not only about kind of micro insurance and so on. And then there's another topic, which is how can insurance do more? And again, for me, that applies through the three dimensions, but also for all types of insurance. So I don't want this to be equated only with micro insurance, because then also lots of companies which don't play in that space, and reinsurers and all the rest of it kind of don't get included. So that there's a big role, I think, that insurance does play. So I want to make sure that we look at everything, and to mention just something that Craig brought up, if companies have insurance, they're much less likely to fail, and therefore they can continue to provide people with jobs and so on, right? And we've seen examples in the cyber area where lots and lots of SMEs go bankrupt in countries like UK and US and so on, because they didn't have any insurance, and allied to that, they didn't have any risk management either, which the insurance can help them with. Right. So I think there are lots of things that we can look at, but it shouldn't be only about micro, important as that is.
Thank you, Susan. And I think maybe I have to apologise a little. The A2i has probably skewed the conversation a bit more in this direction. Our work is predominantly focused on supporting supervisors to create an enabling environment for the vulnerable and the poor. But I definitely think, take your point that the contribution of the insurance sector is much, much broader than just sort of SDG 1, SDG 2. It's also looking at the investment activities, the corporate citizen, the insurance sort of player is. So it's a lot broader. I'm going to now again just turn to the chat and actually just share something that's been shared, I think, by one of our Brazilian colleagues, I think the supervisor from Brazil, just mentioning that the new microinsurance legislation in Brazil establishes that insurers that operate with microinsurance must observe the principle of sustainability, which states that the products must be developed with the objective of providing sustainable social development through adequate mitigation of the risks of the population in a situation of social vulnerability. which I think is a nice example of showing how the insurance supervisor is really thinking very broadly about the social importance and the value, which we say to the consumer, of the insurance that is provided. I'm going to ask my colleagues now to load up the results. We are coming very much to the end of our time, but to load up the results of our Mentimeter poll from earlier. Okay, I think we can't quite read on the bottom, but I can see from looking across this that the SDGs which participants felt insurance had the most impact on was firstly SDG 1, no poverty, which I think may be also the reason the slight skew maybe in our discussion today, and then closely followed by SDG 3, good health and well-being, followed by, I think it's SDG 8, is it? Decent work and economic growth. I don't know if any of the panelists want to comment actually on the results that we can see in front of us. I mean, are you surprised by what we see? Is this, you feel, a good representation of what are the more important SDGs for the insurance sector?
So I think, or at least I think, and our research also showed that 13 climate, I think, is very important. So I wouldn't say I'm surprised it didn't get more votes. I'm not necessarily surprised, but I think that may be because, as I say, we were very focused on all types of risks, from very large corporate down to micro, and on investments as well as underwriting.
Yeah. No, I've got to say, I was also surprised not to see climate risk higher, because a lot of the actions I've seen so far from the insurance sector have been around the SDG 13.
Could it be also that COVID has helped introduce a form of equilibrium in that? And that it's true that, and I don't think anyone is putting into question the role of insurance for climate resilience. But before, it was only climate resilience, at least from a macro point of view. And if anything, COVID has probably given the world a crash course on a health crash course, and life and death crash course. And I'm actually I quite like this output, which is, very conjunctural, and shows that we have to find an equilibrium. And if the planet needs to be taken care of, then we need to make people more resilient also as to how they take care of it.
Yeah, no, I think that's a very good point, because I have seen polls similar to this that were done maybe a year or 2 years ago, let's say pre-COVID, and the results were quite different. And I think that's probably very true. That's why now SDG 1, SDG 3 are more clearly recognised as important. Now, I have sort of one final question, which we've already sort of partly asked the panel, and I'm obviously quite short on time now, but I will put the question to the panel, and those maybe who haven't answered it so far, it'd really be good to hear from you. It's to say that what one action would you like to see from the insurance sector to improve its impact on the SDGs? I don't know if Christiaan, you want to start there. So what one action?
Thank you, Anna. I would say really seeing how SDGs form part of strategy setting. I think everything starts from the top, and then tangible targets, I'd say.
Thank you. Very clear. Garance, you partially addressed this earlier, but is there anything you would like to add to your previous?
So I would like there to be this organization that centralizes, thanks to the IDF, and then the MIN, who takes a central role there in tracking and monitoring, analytically and also qualitatively.
Thank you. Then Susan? Yeah.
Sure. So I absolutely agree on strategy, and it needs to be built into the strategy, not be, something that is only thought about on Earth Day or whatever. So I would like to see more explicit discussion and reporting about the UN SDGs in companies' CSR reports, and even better in annual reports. And I would like this to be a topic that boards are having a look at. That, as you mentioned before, I've been on some boards. I'm very interested in corporate governance, and the whole ESG topic is is a big one. So it would be great if that could, if boards and therefore trickling down to management and then KPIs and so on could consider and build in the SDGs when they're looking at how the company is performing in the ESG phase.
Thank you. And then finally, Craig, I'm going to give you the last word on this.
Okay. So I like the recommendations everybody else gave you. So I won't repeat them. I'll give you a new one. And most of the coverage that's out there, a lot of it, a huge chunk of it, is sort of mandatory, embedded. It's something that people get when they buy something else. So it's not standalone insurance. And I think that's fine as an entry point, but that we wanted to use that to then upsell, cross-sell other products that are possibly standalone insurance, that are voluntary. In order for that to happen, there needs to be trust. And I think that the whole issue of trust is so critical. And it gets to the SDGs because I think you're not going to be able to get sort of the impact on the SDGs that you want to have purely by embedded mandatory products. And so we do need to sort of graduate customers, policyholders from sort of mandatory policyholders to enhance it, increasingly buying voluntarily. And so I do think I would love to see supervisors sitting down with their industry and saying, what can we do to build trust? Certainly supervisors play a huge role in this, critical role in making sure that customers trust insurers and the insurance industry. But I think that there's a lot more that the insurers and the associations can do by everybody sort of sitting down and saying, let's make a plan and coming up with smart moves to enhance trust in the market. I think is an important, huge step toward expanding access to voluntary products.
Thank you, Craig, and thank you all of you for your very concrete sort of action points and ideas there at the end. We certainly have a lot of ideas to take forward, and I'm glad we didn't just stop actually at data collection, that we also thought about other things we can do at the same time. So yes, data collection is important, and we do need to work together to tell a stronger impact story. But it was great to hear about other suggestions there on how we can actually, in the meantime, still make sure that insurance plays a bigger role in meeting the SDGs, and then that ultimately it's better integrated, should we say, into development toolkits. And therefore, as a result, more people, more small businesses sort of in the future can really benefit from what insurance can bring. So I'd really like to thank all of you for your very useful, very interesting contributions today. I also thank the participants or the audience for your contributions. We did have more questions and things that came through the chat, so maybe if any of the panelists have a quick time to have a quick look through before leaving, I think there are maybe some more questions there for you, and I think it'd be great if you could respond on that. But it's great to see, I think, so much interest, I think, from the sector in the topic. I'd obviously like to extend a very special thank you to our keynote speakers, and particularly here, Her Majesty Queen Máxima. It was a real honour, having her joining our call today. And it's also been a pleasure sort of moderating today's webinar. And I hope that most of you will be able to join us again for the next A2ii-IAIS dialogue, which will be in a month's time on women's access to insurance, so SDG 5. And this will again will be a public dialogue, so it would be great to have many of you back with us then. And as you're exiting, you'll also see a quick question actually in the chat, which is part of our sort of M&E. So please also take the time to respond on the polling question. So thank you again, and as I say, thank you for your contributions, and we look forward to continuing the discussions.